What's up, guys? It's December 15th, 2023. We'll do a breakdown of the Emini. Looks like it was an inside day. We stayed within yesterday's range. We didn't tag the highs or the lows. Pretty slow day, pretty slow price action. The range was 21 points after coming off a pretty big move, so that sucked. Yesterday, oh no, yeah, this was FOMC and this was the day after FOMC. It had a double top and we sold, made it two legs down, leg one, leg two. Leg one, leg two here. That was pretty nice to trade. And then after that, there was a big up move. It went to about the 50% level. However, if this is the breakdown point, because this was the low of the day, bulls pushed up and then came back. So, not the best sign for a bear if you want to see continuation into today. And there was not really any continuation. There was like a couple legs down, but not the best. Small gap down, bar one, gap down, and then how the hell did bar one start? Excuse me. Yeah, small gap down here, and then there's continuation. My dog's barking. I hope you guys can't hear that in the background. So we have a gap put in that's showing bear pressure and continuation with bar one. However, we're selling right into support. I think it's best to wait the first 6 bars or wait the first 10, 12 bars, however long you think. The morning has a tendency to be range bound, so look, big bear bars are big bear bars. Yeah, that's correct. That's hard to say. Big bear bars are getting bought first by the bulls, and bears are shorting the big bull bars, and then they buy the bear bar, and then they short the bull bar. So this is a range bound market, which is counterintuitive to trading a trend. I did point to this as a trend because there is a breakout and there's 2 legs, so the price is expanding out of this range. Part of the market cycle is range, breakout, range, breakout. Definitely good to learn the market cycle. I've been studying the market cycle a lot. Starting to see it unfold. Like, what I mean by fractally is this is a range and we expand. This is a range and then we expand. So it's happening on higher time frames, it's happening on smaller time frames. Anyways, so first 6 bars of the day is there we are. Range bound. No gaps. All gaps are being filled. So if there was a gap right here, it got filled on this bar. Overlap is more than 50%, so it's not good. A huge overlap. It is kind of like an expanding triangle. Very tough to say because there's a double bottom and double top. When there's a double bottom and double top, I just wait for 2 bar follow through and then decide after that. I used to try and trade these like thinking I'd be fast enough, but I'm really not. So for me, it's best to just wait for 2 bar follow through. This is like a break and retest to me. Broke out, come down, break out, come down, and then they find strong. Bulls get strong, put in a good bar above the EMA. Pull back to the 50% mark, and we go for a leg 2. Within a range bound environment, second leg could be a trap, and you can see if you weren't quick to get out of this, you went range bound. You did have some time to get back out at the highs. However, if you were looking for a third leg, you would eventually get stopped out here. I don't think it's the best idea if you're long here to be holding here, but I mean it's not bad. You could buy this high, buy this low, get out here. You can get nerdy with it, but that's limit order trading. I'm looking for a trend, so I did buy this breakout, this pullback, and I got the leg and I got out, and that to me that's like 2 to 3 legs, however you want to count. Maybe this is leg 1, but this is within the range, so I waited for the breakout, so that's be leg 1, leg 2, leg 3. Or leg 1, leg 2. After the 2 legs, the market goes back into a range-bound environment. It's about midday. Pretty tight range, not the best to trade. I got trapped shorting this bar, thinking it was a breakout. And of course, look, not 2 bar follow through, so I got trapped. I sold the high and got out for a point. The market has a double top, triple top, double bottom. Whenever the market has a double top or triple bottom or triple top, double bottom, how I just mentioned, it's best to just wait I was able to wait here and I got paid. I didn't wait here. I had to fix my trade. And look, we get 2-bar follow through. Leg 1, leg 2, and the market goes into a range bound environment. Leg 1, leg 2 for the bulls, and then the bears get their breakout. Leg 1, leg 2, leg 3 fails. This is also a different type of leg here. Leg 1, leg 2. Pretty. So yeah, if you put it at the top of the pullback, which I'm going to just start doing to make it a habit, I'm not going to measure I'll measure just so we can look at it, but I'm trying to get into the habit of just putting on top of the pullback, because so many times I have waited for like 3 points down here, and that 3 points is really me being greedy like this. In this case, it did work, but there's a high probability of me getting profits if I put my pullback to the actual pullback where the market is telling me to. So there's a leg 1, leg 2, and there's micro leg 1, leg 2s. Bears get their leg 1, leg 2, leg 1, leg 2. Bulls leg 1, leg 2. Bears leg 1, leg 2, leg 3 fails. And look, we go into a range bound environment. Leg 1. This is also kind of a range, double top, double bottom, 2-bar follow through. However, this is interesting. I thought this price actually, I wasn't trading it, but where is the open? The opening price. Oh, let me delete that. We had a buy vacuum right to the high of the day. In fact, I think they made a new high, or did they go to this? So there was a new. Yeah, the tick was high, but the body was. So yeah, they made a new high, but the body ended with a tick. However, this is a 2-bar reversal. On a 10-minute time frame, this would be a doji like this, because the market goes up and comes right back down, and this is the internals of a doji. I don't want to lose my spot. I'll just show you guys. Bang. See? So it's important, no matter, like, you could just see the insides. You don't need to swap back and forth, but I like to just think, like, okay, this is, see, now we're on the 10-minute chart. This is a 2-bar reversal on the 20-minute chart. Doesn't really look like a 2-bar reversal. The bars were overlapped. This is the 10-minute chart. This is those 2 bars we were just talking about, and this is still a trading range bar. And what do we do in a trading range? We buy low, sell high. We can go back to the 5-minute, and look. Different picture, same story. Buy low, sell high, buy low. So the market was range bound all day, and we were already expecting that because of the first 6 bars. The first 6 bars are very telling. I'm going to go over some micro gaps, and then we'll go over the higher time frames. I'm not too focused on the higher time frames right now because it's very easy to just talk about the next bar over. Here we have 81 bars to talk about every day. You know, these charts just 1 extra bar, 5 extra bars. So, yeah, micro gaps. I've been trying to practice gaps to understand the strength of the market, and there's lots of different ways to do it. There's tick gaps, micro gaps. This is all Al Brook's methods. It could be found in his course, and I'm just summarizing it. These aren't his words because I'm trying not to do any plagiarism and make sure I'm soaking it up in my own way. So this is all I am taught by Al Brooks, and I have mentors within his community. Yeah, so micro gaps. I'll measure micro gaps by every 3 bars. You just start from over here. Here's a micro gap from the bulls. Let me make this green. Because it's a micro gap because the bulls start to buy here and the resistance becomes right here. This is a double bottom on a lower time frame. So okay, so think about this gap, okay? Think about this gap. Let me find the gap up. See this gap? That was easy. See how this bar traded down here and this bar traded here and this bar. Remember, we always talk about how this bar is a gap. How this gap is a bar. So we can imagine 3 bars here. 1, 2, 3. Now we go here. Do you guys kind of get the idea? Now, like, this is a gap because we don't need to see that bar to understand that the market traded at 64 and went all the way up to 70, 50. And then we wait to see if this gap gets closed. So it's the same concept, it's just a little more granular. Here's a micro gap because the price traded down here and went up there because that's the resistance. And then for the bears, I'm not gonna fill all of them out because there are videos of this on YouTube, and I really encourage you guys to check it out and get the course because these videos are designed to meet more Brook students. So I'm assuming you guys know most of this or are interested in learning his methods. Yeah, so there's a bear gap. Here's another gap. You guys kind of start to see the flow. And then look here. So we're in a range bound environment from here. This is range bound, right? Actually, I'll show it up here. It makes more sense. So, actually, okay, yeah, I'm already here. It is what it is. So what I want to say about the gaps in the range bound environment, this is a really small range, so I'm going to teach the lesson in this, and then just apply it down there. See this gap? It gets put in. This gap is put in. Oh, that's not even right. This gap is put in, right? But then look, it gets closed about less than 10 bars later by these gaps. So this gap's gone. You can leave it there if you want. Don't leave it. It's up to you. And then, yeah, the market starts trending. So in trending environments, gaps stay open. In range-bound environments, gaps close. And although we are trending, we are still within a range. Look at yesterday's low, yesterday's high. And look, so these gaps stayed open for about 2 hours, but they got closed with this bar. And when this bar got put in, there was a gap right here. You see what I'm saying? And gaps get closed in ranges. So keep that in mind if you're trying to figure out what the market cycle we're in, what market cycle we're in. Blah, blah, blah. If you're trying to figure out what market cycle we're in, are the gaps open or are they closed? And then just start from there. That's how I'm kind of going about things now. Like, I understood that, okay, this is range bound, but do I understand the internals of this? This is like on a lower time frame. Just go really quick. I'm gonna just make that the high. Go down to the 1 minute. Okay, I guess the lines disappeared, but the boxes stayed. So I was going by the body. See, this is a range bound environment, and there's that double top and double bottom I was talking about. See, double top, double bottom, 2-bar follow through. So it's all fractal, all works, doesn't matter time frame. Okay, so now the lines are there. I don't know what's going on. You guys get the picture, I hope. Just a little mini lesson on what I've been trying to focus on. Leg counting is working great. I hope you guys caught all those legs in terms of studying. Maybe you didn't trade all of them. Maybe you caught this leg here, maybe you caught that leg here, but second legs are traps and trading ranges. So if you were thinking like this is the first leg out of a breakout, 2-bar follow through, this is the second leg, that's a trap. Leg 1, leg 2, that's a trap. Leg 1, leg 2, you would, leg 1, leg 2, no continuation, leg 1, leg 2. I don't really count legs and ranges though, I just wait for the 2-bar. I think we can go crazy counting legs and ranges because like this is 2 legs. This is leg 1, came up, leg 2, leg 3, leg 1, leg 2, leg 3, that's a wedge top. Leg 1, yeah, I just counted that. So we'll go over to the other time frames. Ooh, the bulls aren't getting good follow through. I don't even care if the market sells. I'm just tired of saying, oh yeah, another bull bar. Oh yeah, it just keeps going. Like over here, I was like, wow, okay, we gapped up above the high, but I guess I read it wrong because this is continuation above the high, right? We gap up and we start buying. 2-bar follow through above the range, so it's good. Market looks like it's starting to slow down around this level. We'll see if the EMA goes into it or the price comes into the EMA now. Be interesting to see. On the hourly chart, it's not good for the bears. Not good for the bulls. They had this parabolic move. Really nice bars late in the trend. I'm sure you guys can tell me saying that. See, those were the nicest bars late in the trend. They had a gap up, and it kind of started to sell. We never really made a new high, and bears have now just put in bearish market structure, making a lower high. This could still just be a bull flag and we go higher. Bulls have momentum on their side, so it is what it is. Unless we're range bound now, then maybe we do buy low. Maybe we tag the hourly EMA and go. We have a gap open, so the first tag might be a buy. it'll be interesting to see what happens. Hope you guys are studying. I hope you guys had a good weekend. We're 1 weekend away from Christmas. Spend some time with your family. Take this time to recharge. This is the first time I'm gonna like not use my family, but like actually try and recharge because I want to go hard next year. Not with making profits, but like more studying, meeting you guys. Not necessarily meeting up unless you guys want to grab a beer at Ibiza. Anyways, so yeah, you guys keep studying. Hit the follow button. Drop some comments. And yeah, I'll talk to you guys on Tuesday. Have a good day. I'll talk to you guys later. Bye.